Hey everybody, welcome to the investing channel. In today's video, I want to talk to you guys about liquidity and what that is and how it relates to investing. So let's go ahead and get started. But before I do, please look over here on the right side of your screen, hit the subscribe button if you're into investing, no matter what it is, stocks, bonds, real estate, whatever. Hit the subscribe button now. And also when that bell pops up, smack it, click it with your mouse so that you're notified when I come up with the next video on investing. Okay, so let's go ahead and we'll get started talking about liquidity. So what is liquidity? Well, basically it's referred to as how long it takes and at what cost you can convert an investment into cash. So for example, the money in your pocket, the money in your wallet, that money is ready to spend right now. You could go out and you could purchase something with it, and that means that it's liquid. But you might have other types of investments that it might take a little bit of time before you can convert it and make it more liquid so that it's spendable right away. You might have some kind of time frame that you have to wait before you can actually spend it or turn it into a spendable cash. So let's say, for example, you took some money that you have in the bank, you went out and you purchased a handful of stocks. Now, although you can't take these stocks and you can't sell them at any given time that you want, whether it's on a weekend or maybe it's late at night, what you have to do is you have to go through a stockbroker or a brokerage company, and you have to wait for the next market opening, the next market day, a business day, that you can go in and you can sell those stocks. And when you sell those stocks, then what's going to happen is the brokerage is going to charge you a nominal fee for that, okay? So what might happen is when you go to sell those stocks, depending upon what brokerage firm you use, you could end up paying a large fee to be able to do that. So there's some brokerages out there that charge small fees, and there's some out there that charge large fees. So depending upon who you're with, you could end up paying a large fee. Also, depending upon the number of shares that you're selling, you could end up paying a large fee. So if you're only doing a small number of shares, that brokerage could charge you, a larger amount of money to be able to do that. So let's talk about liquidity with relation to, let's say, real estate, stocks versus real estate. So if you own a piece of property or a house or whatever it is, vacant land or whatever, to sell that, to make it liquid, it might take a longer period of time, right? If you own a piece of land on the outskirts of town, it could take, 6 months, a year to be able to sell that parcel or even more. So if you own stocks, it's far more liquid than real estate, because you could just, on any business day, you could just reach out to your brokerage and you could initiate a sale on that stock. The other thing about selling property to make it liquid is that even though you might be sitting on it for a while, you might have to, depending upon how many other homes in your neighborhood are for sale, you might have to actually lower the price of your home just to make it more marketable so that somebody will quickly buy it rather than buying the house down the street from you. So you could end up losing money on the fair market value of your house also. The other thing that you have to worry about is, let's say you sell a house. You're going to have some really large fees on selling your house. You're not only going to have to pay a commission to a real estate agent, but you're also going to have the closing fees through title and escrow. So these are things that you're going to have to worry about when you do that. Also, you need to be aware of is that once you sell the house, you're going to have to pay taxes on it too, right? On whatever profit that you made. So that takes away from more of the money that you currently got. So selling stocks makes it a little bit more easy and user-friendly to be able to quickly get cash and make your investment more liquid faster. Okay, so now let's talk about liquidity with regards to selling a small business. If you want to sell a small business, if you need to quickly get some cash on hand, that could take a while, right? You have to market it. You have to wait for the right potential buyer that would be interested in the business. You have to list it with a commercial broker that puts it in a list of a bunch of other businesses to sell. So let's compare that to real estate. If you have a house, then that house might only take a week to sell. It could take 60 days to sell. It could take 90 days to sell. It could take a few months. But to sell a business could potentially take longer than a real estate transaction. So with regards to comparing stocks, real estate, and a small business, the small business is going to take the longest to sell, or could potentially take the longest to sell to get some liquidity out of your investment. Okay, so one of the things you guys want to think about here is, I've got these investments. I've got other stocks, a bunch of stocks in random companies. I've got a house, an investment property that I'm renting out, or whatever it is. I've got a small business that I can sell, and I don't want to have to get rid of these things, right? You want to hold on to them, right? You want to hold on to them for a while and let them continue to mature in value. So the thing that you want to do is you want to have an emergency fund set aside, and what you can do is you can put some money in a money market account, and I would recommend having anywhere between 3 to 6 months in reserves. This will help protect you so that if anything happens, you need to quickly get some liquid cash quickly, you can tap into those reserves rather than going off and selling your stocks or selling your house or your investment property or even your small business, okay? So I highly recommend that for you guys, setting aside a reserve fund. Another good option for you guys is you guys can invest some money into bonds. Now, bonds are going to pay a higher rate than a money market account without the high risk or the volatility that comes with the stock market. And that's it, guys, for liquidity. So if you guys enjoyed this video, please give it a thumbs up down below. It helps me with the YouTube algorithm. I'll be adding more videos about investing. So please look over here on the right side of the screen, hit the subscribe button right now, and also when that bell pops up, smack it with your mouse so that you're notified when I come up with the next video. So thanks, guys, for watching. Oh, and don't forget, I have other videos already, so please go check those out, okay? And I'll be adding more videos each week. So I look forward to seeing you guys on the next video. All right, bye-bye.